We have a jam-packed show for you tonight. It would have been jam-packed enough, just based on it's the Monday morning show where we talk about next week, which is going to be like the biggest the number of releases and things happening next week is just crazy. But then, you got to have a little bit of extra thrown in. So breaking news, you heard it here first. We have a new world order. The UN, which has always been feckless, is now completely worthless. If there's a problem in the world, like let's say Thailand and Cambodia having a border dispute, don't call the UN, call Trump. He swoops in and says, hey, figure it out, or we'll stop trading with you. You won't be able to send any of your product to the United States. No more exports, period. Almost no actual sovereign state can afford to ignore that demand. As long as we wield that stick in a just way, not a fair way, but a just way, I think it's going to be a fantastic replacement for the UN, which has never stopped a war, to my knowledge. Let me know in the comments below if I'm forgetting some more. I should have asked Grok, and maybe I'm being a little hyperbolic, but I don't think they've ever stopped a war. Well, now if Europe and Australia and Canada and Argentina sign up to this concept where the United States could count on them in a situation like this Cambodia, Thailand thing and say, hey, not only will the United States stop dealing with you, but so will all of our UN partners. Anyway, this could be a great new way to do international diplomacy that would stop a lot of nonsense out there. Anyway, we also saw today, just to keep on going, we also saw the European Union say, and Australia, I believe, combining to say, don't even think about it, China, when it comes to Taiwan. Anyway, but that wasn't really the breaking news. I'm sorry, I broke into the breaking news because that just occurred to me earlier today. It's like every time some skirmish starts around the world, Trump just puts on his cape. He runs into a telephone booth, whatever that is, puts on his cape and solves it. Well, this is the real just breaking news. The pre-market is nicely up as the European Union and Trump agreed to a 15% deal on import tariffs. That's a lot less than the 30% that was happening if they didn't solve it. The deal represents the two largest trade zones on Earth, with 40% of the world's GDP between them. CNBC said this: Trump said that the 27-member bloc also agreed to purchase $750 billion worth of U.S. energy and invest in an additional $600 billion worth of investments into the U.S. above current levels. He said that the bloc would also be purchasing hundreds of billions of dollars worth of military equipment, which they need in order to help fight the war in Ukraine, unless, of course, it ends next week. He didn't provide a specific dollar amount. Ireland's Prime Minister, Michael Martin, said the agreement brings clarity and predictability to the trading relationship between the EU and the US. It does mean that there will now be higher tariffs than there have been, and this will have an impact on trade between the US and the EU, making it more expensive and more challenging, Ireland's Department of the Tayo search said. By the way, the dollar versus the euro is up 13% versus the dollar. That is almost exactly the same impact as these tariffs. So maybe the euro will now come back down to normal. The dollar will go up, and that'll offset some of this problem. Still, that's what I've been trying to talk about all this time, is it's not just about tariffs. Still, the agreement creates a new era of stability, the statement continued. German Chancellor Friedrich Merz, that's, I think it's Merz, M-E-R-Z, isn't it? Merz. Anyway, welcomed the new accord, citing the benefits it would bring to the country's auto industry. With the agreement in the EU-US negotiations on tariffs on trade conflict, which would have hit the export-oriented German economy hard, that has been avoided. He says this is especially true for the auto industry, which is currently 27.5 rates were almost halved. Netherlands Prime Minister Dick Schoof said in a post on X Sunday, there's that no tariff would have been better, but he praised the European Commission for securing the best agreement possible. He said the deal underway provides more clarity for our businesses and brings more market stability. Italy's government leaders, including Prime Minister Giorgia Meloni, issued a statement saying the deal helps avoid a direct clash between the two sides on the Atlantic and guarantees stability. The statement also said that Italy considered tariffs of 15% to be sustainable if that percentage includes and is not in addition to previous tariffs. Then Mario Nawfal had this. He said, some European leaders are melting down after Trump dropped a deal so one-sided as being called disaster and scandalous. Well, the only person that they quoted was Belgium, which is basically the Muslim headquarters of Europe and one of the smallest countries in the world and hardly any population. Former Belgian PM Guy, they didn't even get the current guy, they got the former Belgian PM Guy Verhofstadt, said the EU walked away with not one concession from the American side. Well, going from 27% to 15% sounds like a concession. Anyway, what do I know? I'm just reporting. I wasn't there. Mario Nawfal also said on Friday, the world's richest person, who would that be? Oh yeah, Elon Musk, posted on his social network that he thinks Tesla will someday be worth 20 trillion. On the earnings call earlier in the week, he said that when it comes to AI for cars and robots, Tesla is actually much better than Google and by far much better than anyone at real world AI. Actually, nobody's disputing that. I have listened, I can't tell you, hundreds and hundreds and hundreds of hours of the top intellects in the world of AI over the last month. And I can tell you that nobody disputes that Tesla is by far the leader in real world AI. Elon later clarified this estimate. This is me talking now, not the article. He clarified the estimate in I think it was during that interview he gave yesterday. He gave a range. He said it's a range actually of 20 to 30 trillion, which would include his earlier estimate of 20 trillion for Optimus and 7 trillion for Robotaxi. Once again, he restated that the ARK Invest team under Cathie Wood has done the best job of estimating the impact of Robotaxi. Earlier today, I did a video, you probably saw it, which looks like it'll be the second most watched video that's ever been on the channel. Well, two things that were in that video, if you haven't watched it yet, but I need to re-mention them here because of the context of what I'm going to say, there were two things that were important in that video. Elon did not and would not answer the question about, somebody asked about Tesla selling fewer cars in the future than they had planned to due to the transition in ride-hail. Well, that drop mic moment lined up with a comment by Lars Moravy that implied a future where all cars sold by Tesla will be autonomous. So what you have there is every autonomous vehicle replaces 5 to 7 regular vehicles that are not autonomous. So if they were planning to make 20 million vehicles, that would mean they're now only going to need to make something on the order of 3 to 5 million vehicles per year to hit that 20 million equivalent. Well, this lines up with a video I did several weeks ago where I concluded that Tesla will no longer sell vehicles for personal use by 2028 and maybe sooner, but by 2028. To some of your point, yes, there might be other companies continuing to sell new vehicles for people to consume for their own use, but I don't believe Tesla will. That's my point. If you go back and listen to it carefully, I recommend for a lot of you, you should go back and listen to that entire video a second time. I tried to lay out the argument very carefully, but it's really easier to get lost in the numbers. The process is where people start using robotaxis a lot, okay? And then pretty soon the value of a robotaxi, to purchase a robotaxi from Tesla, they got to raise the price because it'd be stupid not to. And in fact, it'll get so high that the only people that'll buy from them will be people that are going to put them into some kind of a fleet. And in fact, it may turn out that Tesla uses all of them for their own fleet, or some combination thereof, or in between. Especially in China, a lot of the cars might go into fleets owned by others. Anyway, many said that folks who live in rural, one of the comments I got back was that many folks who live in rural areas will not be able to be served by ride hail. Well, this only represents about 5% of the population. Did you know that? Only about 5% of the US population lives in a city or a little town of less than 5,000 people. My guess is they will be keeping their old cars running for years like they do in Cuba because they can't get any new cars. And it will not be profitable for General Motors to make cars or trucks for just 5% of the population. Not going to happen. Now, there might be cars imported from other countries where it'll still be profitable for them to make them for the world and then make some for the United States. But I think this kills off both Ford and General Motors unless they have autonomous vehicles. Also, what was I going to say about that? Oh, darn, it just went away. Anyway, there were tons of comments, but the following two stood out, and I wanted to respond to them. Number one, this is from Mike K. 2BN. Number two, BN. He says, interesting that most comments do not consider two facts on the current car markets: the aging of America and the out of control insurance market. Driving is just too expensive per mile, regardless of what you drive. Also too dangerous for senior drivers. Alternatives such as robotaxis are being forced on seniors regardless of where they are, whether rural or urban. Yeah, I think this is a great point. Insurance rates are going up like crazy. It's just nuts in some parts of the country. And then the aging population. So you've got the two ends right now of the population. The young people don't want to be bothered with owning a car. That's very, very clear. It's going to get, I think that'll get bigger and bigger as the cost of robotaxi goes down. You get the other end of the population, which is the aging population like us. We're down to one car. We don't need two cars. We have one car, and that's even before we start using robotaxi or any kind of ride hail. Since we sold my other car, we have not used ride hail one time. We've just figured out how to balance it out and not need a second car anytime. As an example, people who buy personal, I didn't write down this guy's name. I'm so sorry. Oh, I need to go back. I'm sorry. Anyway, I'll try to remember to mention you tomorrow. This is an example, he said, of another industry, another place which would be corresponding to the robotaxi situation. He says, people still buy personal fishing boats, even though it's much cheaper to hire a charter than it is to buy, insure, maintain, fill with gas, buy bait, etc. For me, it's the independence and freedom of having that vehicle. All that being said, as a Tesla investor, I think Tesla will have a huge advantage and on the TAM in the robotaxi business. It's time for some Windex. It's possible Randy can only see through one side of his usually accurate crystal ball. No, I get it. I'm the opposite side, though. I'm a guy who, when I was young, I thought, man, I want to have a cabin in the mountains. Oh, I'd love to have a sailboat. Oh, and then when it came time, my brother and I started talking about getting a cabin. We said, why would we want to do that? If we want to go to the mountains, we'll just rent one. And then later on, it was like, why would I want to? I mean, a sailboat, do you know what it costs to go out on a beautiful schooner for the day with a captain who takes care of all the problems? In Southern California, if you pick your timing like October, about $500 for the day. That's it. $500 for a beautiful day on a sailboat, and you don't have to worry about it when you get back home. The other important issue covered this morning was the characteristics of the Model Q, because one fella sussed out, found a Model Q, what appears to be a Model Q, and he was able to give us a list of what was going on. So those are the two things that were covered in that video this morning. Now, AJ, in a 3-hour video out today, has suggested that sometimes a low-cost option in an auto line lures new customers into the showroom or onto the website, and then they end up buying the higher priced spread. Yeah, they buy the better one. They're like, and I've done this. You go in and you're like, yeah, I can afford a $29,000 car. You go in and you're like, oh, but I want the better wheels. Oh, but I want, automatic windows. Oh, but you own all those luxury editions, and you walk out of the showroom with a much more expensive car than you planned for. So this is very possible that the Model Q will actually drive up the sales of the Model Y. That's an idea I had not included in my analysis. Thank you, AJ, for that. And by the way, tonight at 7:45, there will be a video where I cover that 3+ hour video that AJ just did about the future of Tesla, about his projections about future earnings. This is not miss. Do not miss that show tonight. I'm telling you, it's going to be a great show. I'm going to point out where AJ is wrong a lot and right a lot. I really like AJ. I really like his analysis. You do not want to miss this show tonight. I will, that 7:45 tonight, okay? By the way, this is Randy Kirk, in case you haven't figured that out. The guy that wears the weird shirts. Yeah, that's the one. And what else? Yeah, I don't know. So usually, oh yeah, like, save, like, and tell your friends about it. And what else? Hit notify, subscribe, all that stuff. Yeah, join Patreon. Okay, like I don't mention it anymore. So guess what happens? Nobody joins Patreon. So have I done anything lately that might have made you money in the markets, or might have not lost you money in the markets, or just filled you with joy and enthusiasm for the day? It made you happier than you were when you started watching the video. Well, if any of that's happened to you and you think you can afford $3 or $5 or $10 a month, would you hit Patreon and jump in there and provide some happiness to me? Thank you very much. Okay, Mario Nawful again. Holy cow, Mario's getting all the numbers today. Says the EU blinks, Trump wins. I already said that, right? You know what? I duplicated that. Let's go past that. All right, so here we go. Here is what's happening next week. Holy mackerel. We have so much going on, but nothing on Monday. They decided they would rather cram it all in to Tuesday through Friday. So let's start with Tuesday. Tuesday, you have the advanced U.S. trade balance in goods, 96 billion last month. That was negative 96 billion. So it was no guess this week. I'm going to say that I don't know, haven't got a clue, but it'll be important to see. This is a really good one. We really want to pay attention to this. What impact is the tariffs having on our trade balance? The idea would be we'd be getting closer down to something approaching zero, but maybe are just better than last year. Advanced retail inventories, advanced wholesale inventories, those will be on Tuesday morning also. As you know, I don't care very much about those. And last month is a good example. Retail inventories were up 3%, 0.3, and then wholesale inventories were down 0.3. Tell me, is that going to help you understand the market at all? Not me. All right. Now we've got home price index on Tuesday morning. That's the Case-Shiller. Last month it was showing up 3.4. I would not be at all surprised to see that would be substantially reduced. I wouldn't be at all surprised to see that might be 1.4 or 2. Because that's what I'm hearing out there. I'm telling you, the Federal Reserve Chairman is too late. From what I'm seeing now, let's give him credit where credit is due. I'll try to remember to do that on Tuesday night. Nicholas Gibbs, he said, hey, I saw it in Florida first, even before we were sitting in California. And I talked to my friend, the real estate guy across the street from me here. He says, we have 4 units in our little subdivision up for sale right now. And that's very unusual. We usually have 0, maybe 1. Right now we have 4. 2 have been taken off the market because they didn't sell. They're taking 2 months to sell. That's a really good number compared to normal, but it's not a very good number compared to the last 10 years, where sometimes houses in this neighborhood would sell before they went on the market. So yes, it is definitely becoming a buyer's market, at least for now. And yes, he says prices are too high and people are having to cut in order to sell. So I think we're going to see some action, some evidence of this. There's been evidence of it other places, like, for instance, on Truflation. I'll give you those numbers in a minute on Truflation. All right. On Wednesday, this is continuing on Tuesday. Consumer confidence comes out on Tuesday. This is the more, I think, accurate rating, the consumer confidence numbers compared to the consumer sentiment. Last month it was 93. They're saying it's going to go up to 98 I think the folks are starting to feel really, really good about what's happening in the economy. By the way, do not believe the polls that you're seeing that are showing people not happy with the economy. There are now 3 or 4, several major polls out saying that the U.S. population, 46, 47%, like what's happening in the economy right now. And then there's an outlier at 36. What nonsense. We've seen this movie before. Wednesday morning, we've got ADP employment. Keep in mind that ADP employment is not a good predictor of the employment numbers on Friday. This last month, they were negative 33,000. I think they were a little negative the month before. This month, they're thinking they might pop 82,000. That's only private payrolls, no government payrolls. So we'll see what that comes out. I have no guess on ADP employment. GDP last month down 0.5, last quarter down 0.5. Now remember, that was because of the pull forward, all the people that were buying ahead of the tariffs, and this had a big impact, at least probably 3% impact on the number. So this month you'll have that backing out. And so the GDP number that's being suggested is around 2.3. I think it'll be higher. Because of this backing out. So it might come in at like 4, and then you got to back out the part that shouldn't be there because of this lumpiness. And so the 2.3 number might be the real GDP. That might be where we are right now in terms of the growth. Some of the numbers right now are talking 1.8 to 2.5. So 2.3 might be a good number in terms of reality. Pending home sales last month were up 1.8%. This month, they're suggesting it only be up 0.5. We've been seeing okay numbers on sales, not great, but okay numbers on sales, even though, as I just pointed out, the prices are going down and inventories are building. On Wednesday afternoon, we get the Fed's interest rate decision. I think there is a 1% chance, there's a greater than 0% chance that the Fed will lower 25 basis points. I think they should. I think it's stupid that they're not going to. I think that the Fed chairman is politicized. There is no evidence, including from the Atlanta Fed, saying that inflation is currently around 2.4%. Trueflation this morning was at 2.05 overnight and 2.07, I think, year over year. We're talking about no inflation. We're talking about the Atlanta Fed and Trueflation agreeing that there's no inflation. It is time to cut those interest rates. And then the Powell press conference after that, where I'm going to watch it, but I'm going to be holding my nose the whole time unless he cuts those rates. All right, Thursday. Like I said, there's so much coming this week. The market is going to be roiled all week long. So we've got Thursday, we've got 217,000 initial jobless claims last week. They're thinking that's going to pop back up to 221, but they never know what they're talking about. I have no idea either. It's always a fun surprise. The employment cost index. Okay, here we go with the PCE index. So employment cost index last month went up 0.9. They're thinking it's going to go up 0.8%. Holy mackerel. So people are still getting money in their jeans. That is going to make this economy go crazy by the fourth quarter. It's going to go nuts. And every month, if that turns out to be true, the employment cost index is up another 0.8%. That is going to just be nuts. Okay, personal income last month was down a little bit, down 0.4. They're saying, no, it's going to be up 0.2 this month. Personal spending last month was down a little bit, 0.1. This month, they're saying it's be up 0.4. We'll see where those numbers come in. PCE last month came in at 0.1. They're thinking it's going to be 0.3. I think they're going to be now, this is usually a number that you're able to do a computation and come to a number. We did see the CPI a little stronger than expected, but the PCE was really low. They're thinking that this is going to come in at 0.3. I think this is going to be not 0.3. They're saying year over year would be 2.5. That'd be a great number. It is a little bit up from last month at 2.3, but 2.5 would be fine. And that would be more evidence of why this Fed should be cutting. The core number, they're thinking, is going to be also up 0.3. and the core year over year at 2.7, the same as last month. And then Chicago Business Barometer on Thursday also. Last month it was 40.4. They're thinking that's going to pop up to 41.3. More good news. Then on Friday, just because there hasn't been enough all week long, we get the U.S. employment report. Last month, we had 147,000 new jobs. This month, they're thinking there'll be 102,000. I always, of course, want to see what the adjustments are. We'll find out all about that on Friday. 102,000, that'll be a good month. Everybody be happy with that, given the overall circumstance. The U.S. unemployment rate will pop back up to 4.2. That would not be shocking. U.S. hourly wages will go from 0.2 to 0.3. Last month, only up 0.2%. They're thinking it'll go up 0.3, which would be in keeping with the other number earlier. Hourly wages year over year was up 3.7. They think that pops up just a little bit to 3.8. This would be a little stronger than Powell would like to see it. He'd like to see it closer to 3, but not horrible, okay? And then finally, not finally, there's still so much more. S&P final U.S. manufacturing PMI last month was 49.5. They're not going to give us a guess, but they are going to give us an idea on ISM manufacturing, which is 49 last month. They're thinking that's actually going to be up to 49.5. Construction spending, which was down 0.3, they think that's going to be up 0.1. And then consumer sentiment, the one that I don't trust, from the University of Michigan, was 61.8 last month. They think it'll go up barely to, when I say last month, that was actually 2 weeks ago. This is a every 2 weeks deal, and this is, they think it'll be 61.9 after they get their other 250 people to give them an opinion. And then we'll begin with auto sales other than Tesla coming in. All right, Yahoo Finance says big tech stalwarts Apple, Amazon, Microsoft, and Meta will all give earnings this week. I know there wasn't enough in terms of economic reports, right? You needed to have 4 of the Magnificent 7 reporting this week. Well, it's going to put in the Fed. Oh my gosh. So, and then there's a busy week of corporate earnings with 164 members of the S&P 500 reporting during the week. And that would include other stalwarts such as Boeing, Coinbase, Exxon, Chevron, Starbucks will all be reporting as well. Mario Nawfal is being quoted a lot today. He says that Trump policies will help us with the national debt. This is according to Russ Vought. CBC was using the CBO, the Congressional Budget Office, was using artificial baselines. If you adjust for that, the bill, the big beautiful bill, reduces deficits and will help us with the national debt. Can't wait to see the national debt numbers. I think those are next week. The moves that we are making as an economic team under Trump's leadership will lead to about 1/3 of what's necessary to balance the budget. So he thinks that we're going to get about $600 billion of the $200 billion out of the combination of the things that are being done with tariffs and the big beautiful bill, et cetera. And he says, well, and we're just only 6 months into it. Now, I don't know whether Bessent would agree with that, but maybe we'll see. Maybe Bessent will have a comment. He says, we're making big moves, and I think the country's going to come alongside of us and see the progress. Well, like I said, 46% of the people say they like what they're seeing. Okay, we've got Tesla right now is up $5 in the overnights to 321. And let's go ahead and look at the rest here. We have got the bonds are up, unfortunately, but they're seeing strength. They're seeing a strong situation. They're up to 4.4, up 1.6 basis points to 4.4. Wow, holy mackerel. We'll see what happens. Oil is up 16 cents, $65.32. That's right in the middle of where it's been for a long time now. Natural gas has perked up a little tiny bit, another 0.87%, but still $3.13, really at the low end. We've got gold at $33.35, $2 more than our favorite number. We've got silver down just a tad, still sitting at $38.35. It's barely down, call it flat. We've got copper up another 0.58%, sitting at 582, but that's not as high as it's been. That's down a bit. The dollar is down a little bit in the overnights, or the pre-market, what are we going to call it? And Bitcoin up 1152 on the day, sitting at 119,380. Given all of the risk-on environment right now, all the things that seeming so good, if things go well this week with some of these prints, I think we could see an all-time high on Bitcoin. I'm still not convinced, even as much as CERN has tried to convince me, I'm still not convinced that I need to be an investor in Bitcoin. I'm not convinced that it won't at some point just go, the arrow just come out and just go like this. That still bothers me. And I'm sure you'll make a comment about that below. But I'm just still not convinced. However, on a day-to-day basis, we can start to see trends now after watching it, after reporting on it now for 2 years, over 2 years, every single day. I give you these numbers. Well, my brain just has to go, okay, let's see. Well, we've been sitting at 119.4 for a while. We've got a risk on situation. This Bitcoin tends to go the direction of the risk. So yeah, if it's a good week, I think we could see all-time highs next week. Okay, equities, all equities up. You've got the Dow down up 0.30, the Dow up 0.31%, S&P up 0.34, and the NASDAQ up 0.46. I'm pretty sure that we'll see the markets up tomorrow. Tesla is already up $5, as I mentioned. Just checking on that just for one more time, just for fun. Yeah, $5. So I think there's a good chance that Tesla will be up, and probably more than that, $5, on its way to 1,000 by the end of the year. Oh yeah, I think we need to get back to all-time high first. When will that happen? Exactly. When will that happen? It'll happen. I gave you the list yesterday. I think I gave you the list of the catalysts that I think need to be hit with regard to Robotaxi. It's all about Robotaxi. As those catalysts are hit, we move closer and closer to all-time highs. And once we've got we've got the safety driver out of the seat, we've got a larger area that's being worked. We've got a few other situations in the country, a few other cities where we're actually no safety rider and a good-sized area of Robotaxi, and we start adding a few more to the fleet, and we still don't see any problems. We will be back at all-time highs, and we will be eclipsing what AJ thinks we will be. And remember, in just a couple of hours at 7:45, come on back and see what AJ had to say. And what I think he got right, and that's a lot, because I respect the heck out of AJ. I think I gave a list, like 10 things he got right, but I also gave a list of about 10 things he got wrong. So I think you'll enjoy that video, 7:45 tonight. All right, let's see. You've probably watched all you're going to watch. If you just watched those 3 today, if you just watched what we did this morning, if you've already watched it, you should probably watch it a second time. Seriously, you should watch it and just, it's like the most important video. I think it's the most important statement that Tesla has made, and that's including a lot of important statements. Okay, think about this now. What they're saying is, we're not going to be making any more cars with steering wheels and pedals. That's what they're basically saying. There's not going to be any new cars coming out with pedals and steering wheels. And my feeling would be that it's not that long before the pedals and steering wheels come out of the existing cars. And that's, a year, 18 months, maybe a little longer. And then at that point, the cars will be so expensive, assuming there's quick adoption, that they'll stop selling to average consumers, because average consumers won't be able to buy them. Okay, that's a big deal. That's a big change. Now, I know I brought it up months ago, but now Elon and Lars have confirmed it. All right, that's what basically happened yesterday. It's very, very important. All right, that's all I got for you right now. It's been great talking to you.